Today I'm going to be talking about a machine learning project that I built. This project is called CredVibe. It is a credit risk assessment system that helps predict default probability and assigns CIBIL-like credit scores from 300 to 900 and classifies the applicant into specific risk tiers for faster loan decision support. I built this project using Python, logistic regression, Optuna, scikit-learn, fast API for the backend, Streamlit for the front end, and MLflow for the experiment tracking and model registry to create an explainable and production-ready credit scoring workflow. I have used logistic regression primarily for its explainability, as in the financial domain. Explainability matters more than probably a better accuracy. With a model which cannot be easily explained using business rules. So, a key highlight of this system is the focus on the financial model interpretability, and that is why logistic regression was selected to support the transparent predictions, business rule integration, and the regulatory style validation. The project also includes scorecard focused validation techniques such as information value based feature selection, VIF filtering, case statistics, Gini evaluation, and out of time testing to ensure that there is stability of the model and reliability. In this particular demo, I'll be showcasing the Streamlit application where the user can enter the applicant details and instantly receive the default probability, the credit score, and the overall risk category. So let's get started. So these are the some of the details that need to be filled by the user. So I'm going to take one example first. Let's say we have a 27-year-old with 5 lakh income and is looking to seek a loan sanctioned for 2 lakhs, and the loan tenure is say 13 months, and the number of days average DPD per delinquency means for every delinquent month on an average how many days past the due date has the payment been made by this particular user. Let's say that it's pretty high at around 19, and the delinquency ratio, let's say that it's 29. So of all the months that this individual has been repaying the loans, not just for this particular account, but for all the accounts since he opened a credit account, his credit history will be maintained. So in that entire period, for all the months, the percentage of months that he has gone past the due date is what is the delinquency ratio. Let's say that it is also like a high figure at around 29, and the credit utilization ratio. Like each person is assigned a credit limit based on their profile. So let's say that for this particular individual, he has already utilized 56% of his sanctioned credit quota. And let's say that he has three open accounts, and residence type, let's say, is rented educational loan and unsecured. Let's look at what the prediction says. As you can see, his credit score is pretty low and the default probability is high and the overall rating is poor. Like, how do you interpret these results? And this is a brief description of it. And any loan disbursing agency will be extremely cautious before handing out this person this particular loan. Let's take another example of someone who is slightly older and having a higher income. Let's say 15 lakh loan amount is this. Let's say this tenure is more spread out, and the Average EPD per delinquency is like just 6 days, and the delinquency ratio is also very much lower than 10%, and the credit utilization ratio is also under 30%, which is what is recommended to ensure that our CIBIL scores are not, at risk of dropping. So let's say that this guy's credit utilization is 20% and he has two open accounts. He lives in his own house. He's looking for a home loan and he has some sort of collateral. So secured means the loan has a collateral. So he may have, some fixed deposits or other assets such as gold or real estate that he would have put as collateral in the loan application, and this boosts one's chances of securing the loan application, since the loan dispersal agency will be more comfortable issuing the loan, knowing that even if this person were to default, they can seize the assets and liquidate it and recover the loan amount easily. So let's look at the credit risk assessment for this person. And as you can see, it is quite high, it's excellent, and the loan amount is also a very small fraction of his annual income, and 24 months is a significantly long period given his annual income, and he can easily repay this loan amount with little challenge, with limited difficulty. He can easily achieve to, clear off this loan. So let's take another example of someone who is middle-aged, 49-year-old, and let's say that this guy's income is 19.5 lakh. He's taking the substantially high amount of 12 lakhs, and the loan tenure is, say, like I'm going to say it's 3 years. And the average GPD per delinquency, let's say it's pretty high at 20. So, and the delinquency ratio is also slightly higher at 24%. So, almost one fourth of all the repayment months he has gone past the due date. So, and the credit utilization ratio, let's say that it is 44, less than 50%, but still more than 30%. And the number of open accounts, let's say it's three. Let's say he lives in a rented accommodation, and let's say he's looking for a personal loan, and it's unsecured. So in this case, let's run the risk assessment, and it's average. The reason it's average and not poor is because may have a high annual income, and he may have had a longer credit history of several years, which may have a favorable impact on the credit score. But even in this particular case, the loan dispersal agencies will be extremely cautious before proceeding with the loan application. And now let me move to the. I'll just show you a few screenshots of the backend. So you can test this application using Postman as well. As you can see, this is the HTTP request that I am sending a post request with this JSON body, and all the details are there. And this is the response that I get, which is also a JSON object, gives the probability, the credit score, and the rating. And apart from that, I have also logged the metrics and done the experiment tracking using MLflow. And as you can see here, this is the champion model, that is logistic regression for, with hyperparameter tuning using Optuna, and this is logistic regression using hyperparameter tuning with Bayesian optimization. This is the challenger model, and this is the champion model. As you can see, the F recall on the positive class is 95.3 for the champion model, and the recall on the positive class for the challenger model is 93.17. And this shows The same, I have also built models using XGBoost, random forest, and a decision tree. But the main reason I said to choose the logistic regression was its explainable power and easy integration with the business rule engine. And as you can see, these are the models which I have registered and which has been chosen as the champion model. And that's it for today, guys. I hope you enjoyed this, and I'll see you again another day. Like, have a good day. Thank you.